Well, good morning, everyone. I'm Iona Bain, and I'm delighted that you're joining us for this special webinar from Cushon this morning, named Pensions, the Sector That Digital Forgot. And this morning, we will be debating that statement and asking a top panel of experts why pensions haven't quite arrived in the 21st century yet and what we can do to change that. Now, we also want this session to be as interactive and dynamic as possible. And we're really looking forward to hearing your questions later on. So please don't be shy, get thinking about what you'd like to ask our panel. Just a wee housekeeping note. The great news is that we have a lot of people attending this session today. But that means we're not able to have everybody appear on video, only the speakers. And so attendees are on mute for practical reasons, but you can share your questions later on in the Q&A function on the bottom toolbar. And if there are any questions that we don't manage to get round to, or perhaps are more directed towards Cushon than our panel, then Cushon will follow up after the event. And finally, we'd love you to share your thoughts on social media about our discussion this morning. The hashtag to use is #GetDigital. That's hashtag #GetDigital. Now, as mentioned, we have a brilliant panel of experts, and I'm looking forward to introducing them all to you very soon. We'll be hearing from them for around 30 to 40 minutes, and then I'm going to ask them all to provide some closing comments, just to leave us with a few ideas to help kick off the Q&A. But before all that, let's begin with a little presentation from someone who basically needs no introduction, but it's worth reminding everyone just how lucky we are to have Baroness Ros Altmann joining us this morning. She is one of the most respected and experienced authorities on pensions and later life in the UK. Her many achievements include serving as pensions minister, being a government business champion for older workers, being awarded a CBE in 2014, and being an all-round friend to consumers on all things personal finance. Ros recently became an advisor to Cushon, and she's going to tell us a bit more about the research that Cushon has just published on the educational challenges and technological opportunities that lie ahead for the pensions industry. Ros, over to you.
Thank you, Iona, and good morning, everyone. It's great to be here, and I'm really excited, both about the opportunities this morning to help you in the audience understand a little bit more about what's happening with pensions and the excitement and the future that we can build, which can be so much better than we already have now. And also just to talk a little bit with our expert panel about what Cushon are doing. So let me start very briefly by giving a few thoughts on what is happening and what was shown by the research that Cushon has been doing. And Cushon is particularly focused so far on younger people, but in my view, there are opportunities for everyone across the whole age range that can be benefited by a new approach to pensions, a new thinking about pensions. What we are seeing, and I think what most of us involved in the pensions industry probably already know, is that most people don't really engage with their pension. They don't really understand their pension. And certainly younger people are saying they want to be able to understand it. They want to be able to be involved and engaged with it. But unless you have user-friendly technology and explanations and education, it's very difficult for them, and I get that. For me, having worked in pensions pretty much all my adult life, at least 40 years, I've always felt that pensions are about people. They're not just about money. They are about making people's lives better, and they can. And for many, of course, they do. Pensions are actually a brilliant idea, but the word pension relates to two very separate things. And I think one of the problems that we have with the image of pensions, in a way, is not just the complexity and the jargon that are involved in everything to do with pensions, but they are a real problem that we can and will overcome, but also the fact that we use the word pension to relate to very, very different things. On the one hand, we say pension is about the state pension, which is a social welfare underpin that government provides for individuals to stop them, if you like, begging on the streets when they can't work anymore. It's an older age amount of money that the government will pay to those people who've worked through the system, paid into national insurance, and then have come to the end of their working life. But we also use this same word for what is effectively a private savings vehicle. And because pensions have got an image of being something to do with poor old people, the word pension often conjures up something that isn't helpful when you're talking about long-term savings that individuals will put aside for the future. And pensions are private pensions, which is basically lifetime savings, savings for old age, later life savings. The Australians call a pension super, at least it's got a positive name. But we've got this word pension, and I believe that private pensions, when we're talking about the non-state bit, are a brilliant product. The problem we've got is that people don't realise it. And what Cushon are trying to do is help break through the jargon and complexity to reach out to ordinary people, workers across the country, to help them understand their pension is something that will be building up for them for the long term. We need new language. We need to get away from the jargon. We need some basic changes, such as pensions are free money for you. But nobody puts it like that. You know, if I said to you, if you give me £30, I'll give you back in exchange £50. Or if you give me £20, I'll give you £50. That's how pensions work. It could be that you can give £10 and get £50 in a pension in exchange. But nobody talks about the free money that comes from an employer contribution to your pension, and also for many and most people, tax relief of at least an extra 25% on top of what you put in, and often more. So on top of that money, that your £20 might be £50 on day one, it's also then growing for you for later life. It's invested over the years, and it can be invested in areas that ordinary people might be proud of. You know, investing in something that will help protect the planet, help boost growth in the country as a whole. These are the ways in which pensions work, which are just not really emphasized by the industry. The industry actually tends, it feels to me, to be talking to a different audience. Although it has its customers' money in pension funds, it seems to be designing products and designing communications that are much more suited to a middle person, a salesman or an advisor, who automatically understands everything about pensions. And the complexity is second language to them. It's not a foreign language, but for most consumers, the language around pensions is just not something they understand readily. It's like talking in Latin. Some people may know it, but most people don't. So what I would really like to help people see is that the industry has this brilliant opportunity to help people understand pensions and engage with them. Why they haven't done it until now mystifies me. It really does, because since 2012, we've had this brilliant policy of auto-enrollment, which has brought in millions of new people to pension saving for the first time. They are putting money in month after month out of their salary. The employer is adding to that, and the tax man is adding to that too. And yet there isn't this blanket coverage in all workplaces, which is promoting pensions, telling you, well done, you've got money in your pot so far, it's a good start, that's great. Now, whenever you feel ready, do more, because there's, with most employers, a matching scheme above the minimum contribution. But even if there isn't, you still have the extra money from tax relief that will be boosting your pension fund on day one. So I think rather than struggling to reach the end consumer, we need much more of a D2C, direct consumer approach. And what I would like to see is making people proud of their pension. That will build on auto-enrollment, build on the success of auto-enrollment, encourage people potentially to put more money in for themselves, rather than the industry approach, which tends to be, okay, government, thank you very much. You've given us another 10 million or whatever customers. That's lovely, but they're not doing enough. You need to tell them to do more. Actually, there's an opportunity for the industry itself to reach out to each individual person who's saving in a pension with them and tell them why what they've done is great, how their money is working for them, and ideas about putting more in as and when they can and why they should. And that's a new approach, which I hope that Cushon will help to develop, and that will help people have this message that my pension is doing good. My pension is doing good, not just for me in 30 or 40 years' time, but actually along the way, it's investing in things that are doing good for wider society and indeed for the planet. And lots of people are increasingly concerned about the problems that climate change will be bringing. So I do hope that through sessions like these and through our discussions and engagement with you in the audience and you out there, you know what's going on and the benefits of pensions and the weaknesses that there are in financial education, financial understanding, in the jargon that is used that means nothing to ordinary people. And hopefully you will be able to join us in reaching out to people across the country to enthuse them about pensions, which in my view are for almost everyone unquestionably the best way to save for later life. Thank you.
Well, thank you so much, Ros. I mean, that's given us so much food for thought, and already we've had lots of really great comments in the chat. And I want to perhaps start off by throwing some of the issues that have been raised already back at you, Ros, and ask, why is it that we fail to see the wood for the trees? We know that at its simplest, a pension is just a pot of money that you build up over your working life so that you can step back and take it easy and go and do something else great with your life. So why have we lost sight of that? You said before that you can't really understand why that message hasn't got through to the public, but perhaps you can have a stab at explaining, what it is that has held back pensions from communicating that very simple, empowering message. What's your view on that?
Well, I think a number of factors have responsibility for this. The traditional approach to pensions, which I think largely still prevails, is that the industry or pension trustees have never really expected their customers to actually get involved in any of the nitty-gritty about pensions. the old mantra, which has changed somewhat, but not necessarily in the thinking of marketing and product design departments within pension companies, was that pensions are sold, they're not bought. The idea was nobody will ever, of their own volition, decide to actually put money aside for the future and save for retirement. So somebody needs to persuade them or cajole them or force them into doing so. And we had an industry that was built up on the basis that people didn't need to worry their little heads about how their money was invested or what was happening over the long run. They just give their hard-earned cash to a pension company and someone else will sort it out for them. And lo and behold, when they reach later life, there'll be money for them. Now, I don't think that really fits with the 21st century. I'm not sure it was ever the best way to address this, but certainly in an era where financial education is so low, and we know that, it's across the whole workforce, it's across the whole school age population. We have not done a very good job of helping people understand money. So you had this situation where the industry is used to people just giving them money and letting them get on with it. That's led to this whole idea in DC, defined contribution pensions, where actually individuals bear all the risk, unlike the traditional pension scheme where the employer basically had to worry about the investments, the individual didn't. And that's part of the problem of the history, in that if you've got a defined benefit pension, you don't actually need to engage with it. It'd be nice if you understood just how generous it was, but many people don't. They just expect this kind of magic money to appear later life, which often has no resemblance to the amount of money that was actually contributed by the worker.
A really interesting issue that's been brought up has been, the ability of workers today to save more, because obviously in an ideal world, we probably would want people to be contributing more to their pension pot. But workers, particularly younger workers, face so many challenges, not least in relation to the housing ladder. So how do we effectively engage younger workers if the end message is ultimately you've got to save more money, and that is a very hard message to deliver to lots of people today?
Well, again, Iona, I'm not sure that's where I would start. And that is the typical industry approach. However much anybody in the workforce is putting into their pension scheme, you always get the message out there, it's not enough. You're going to have a miserable retirement. You're going to be really poor in old age. And you're going to have to rely basically on just the state pension, which isn't enough. So it's always a negative message. I would personally prefer the carrot rather than the stick approach, which is, it's great. You've got some money building up for later life, and help people understand that they probably will want more than that, but without a negative message. Well done so far. When you can, how about getting some more of this free money building up for you in later life and doing good for the planet as well as doing good for you, so that ultimately you will be better off and so will lots of other people. That's not a bad message. I wouldn't be averse personally to pension companies rewarding customers in some way, maybe a lottery or something, prizes. I know the industry feels that somehow is degrading pensions, but actually if you want a D2C message, and part of the problem has always been that pensions is about jam tomorrow, but most people want jam today or need jam today. If there is an opportunity of getting a bit of jam today with a prize, say, or discounts or whatever it might be, I mean, that's probably going a bit too far, but it's that kind of change of mindset, which is that pensions are a good thing, and the more you have of them, the more good you can do both for yourself and everyone else. That is a positive message. If you're saving for a house and you've put the minimum into pensions, it might be that you want to wait till later, but then of course you miss out on the free money that is available if you put some away for a house purchase and some away for a pension. But that's up to individuals to make choice. There's lots of people who have built up unexpected savings through lockdown, for example. Some of that could, and I really believe should, go into building a pension for people. But you don't see the adverts talking about it. You don't see the individual communications from pension companies just saying, by the way, you know, if you've got a bit of money because you haven't spent it in lockdown, you might want to think about boosting that and turning it into even more money. And also just the message, of course, that people have realized through lockdown perhaps just how much they've saved by not buying things that they might always automatically buy at work, for example. That money could be channeled into saving.
And one last question, Ros. You know, I think few of us would deny that financial education could make a big difference. The question, of course, is how do we do that? Is it necessary now in the workplace, given the need to discuss pensions with workers and to make them aware of their options? And how do we do that without creating compliance problems? How do we do that without you know, having lots of regulatory restrictions that will obviously then complicate things and undeniably make the whole situation more complicated? You know, how do we manage that whole minefield?
Well, the one thing, you're right, that I haven't really touched on yet as far as the problems surrounding pensions and the communication of pensions is regulations. You know, the regulatory approach has been less than helpful, shall we say, in terms of being able to reach out to people and help them understand pensions. You know, those people who, as you say, want to try and explain how pensions work and how great they are, will need to straddle a fine line between education and guidance, which is fine, or being accused of trying to sell someone a pension or entice them into it. And that seems to me disappointing, because if an employer is putting a lot of money, which they tend to be, into pensions now for their staff, then it makes sense for them to be able to tell their staff just how good this is. You know, it's something that I would like to see more pension providers producing. You know, really just basic information. You know, let people decide whether they want to do more, but just tell them how they can. And I would hope that we can straddle that regulatory line without crossing it. But I understand the fear that some employers or providers might have in this regard. And the same thing, you know, if your workers are trying to choose between, do I want a pension, or do I want an ISA, or do I want just a rainy day savings fund? You can't tell them as an employer what to do. You can make it available to them. But I think providers need to be aware that a lot more basic information is required by individuals, and maybe workplace financial education sessions, online seminars and tutorials. I think that is a potential way forward. And then you've got the Money and Pension Service, which itself is rebranding and trying to help improve financial education across the country, because people need to know about managing debt as well as managing savings and pensions. And we are pretty much starting from square one.
Well, I mean, this has already provoked a very interesting debate in the chat around education versus engagement, whether we even need education. And I'm sure all of these issues will be brought up during our session today, and that we'll come back to them. But I want to bring in our other panelists now, and perhaps we can start with Michael Sherwood, who's Head of Customer Experience at Atom Bank, which describes itself as taking on the establishment as the UK's first mobile-only customer-first bank. And that certainly gives a very good indication of Michael's view on all this. As someone who has had extensive experience in large financial organisations, I think it's fair to say he learned an awful lot about where the industry is going wrong in how it talks to customers. So Michael, I wonder if you can tell us a little bit about what you learned over that period and how you're trying to shake things up now in your current role at Atom Bank. I think you may be on mute, Michael. No? Oh, I think we're not hearing you at the moment. Maybe you want to try some other settings, or I can come back to you in a minute if that helps. We'll give you a minute to sort out stuff. This is always the way of it. There's always going to be one or two technical gremlins in these kinds of sessions. But let's come back to Michael. Let's turn instead to David Hayman, who's campaign director at Make My Money Matter. It's a new people-powered movement designed to put pressure on the pensions industry to invest in a more responsible, sustainable way. It's been making a lot of waves recently, not least because it was co-founded by Richard Curtis, the well-known comedy writer and director, which is bringing lots of publicity and, let's face it, some much-needed stardust to the world of pensions. But David is a key part of that backroom team that's really raising awareness of people's pension power and putting pressure on pension funds to do the right thing. So David, I mean, this research from Cushon, alongside countless surveys, I should add, show people really care about what's happening to the environment, that they're worried that their pension is part of the problem. So why then have we seen this disconnect between that high level of concern and the actual numbers of people and businesses doing something about it? What are the barriers they currently face?
For sure, and look, it's great to be here and nice to see you, Iona. I mean, I think there's a couple of different levels. I think first on, there's the human side, and we as human beings are wonderful, fantastic people in lots of ways. But I think when it comes to our money, as has been talked about, there is this apprehension, this fear, this nervousness around engaging in money, which kind of pervades many areas of our lives. Interesting stat that you are 10 times more likely to talk to a complete stranger about how many sexual partners you've had rather than your own financial situation. So then it gives you an indication of how reluctant we are to engage on that topic, or potentially how keen we are to engage on the other. But let's move on from that. I mean, I think that the main thing is we are uncomfortable in engaging in these issues, and it's a scary, complicated process for us. And that's part, as we've talked about, on the engagement and the education side of things, but it's also part of the system we are trying to engage with. And so we've talked about that people are starting to make that connection between their money and the impacts on the world around them, seeing that their money isn't just a static savings pot sat in a bank account in Switzerland somewhere slowly accruing interest, but it's actually invested on their behalf all around the world for better and for worse. People are starting to see that, starting to want to engage in that. And I think campaigns like ours are helping to make that transition. But in terms of some of the barriers, I mean, firstly, as we've talked about, this is complicated for lots of people. People don't have a good base level of knowledge. The environment is complicated. The language, which has been touched on for them to try and engage and get their head around some of the issues, is challenging. So I think there's a complication around the system, a complication around the language. I think there's an inherent risk factor which still pervades lots of things, particularly when it comes to the environment and your money, which is, if I'm going to start to invest more sustainably or more ethically, does that mean I'm going to lose money? And I think that has been quite consistently debunked over the last 10 years, with research showing that sustainable funds are matching or outperforming their peers. But there still is that pervasive fear within lots of people that they're just going to lose money if they invest more sustainably, and we're trying to debunk that. I think another area which is a real challenge, and I think something where the pensions industry really needs to catch up, and organisations like Cushon doing a lot to address this, is just the fundamental lack of options for an individual who wants to explore a more sustainable, more ethical, more climate-friendly pension. There aren't the suite of services that consumers would expect in other areas of their life where they are surrounded by choice. surrounded by opportunity for them to kind of access and choose something which they feel matches their values. That suite of choices for pensions is limited. It may be growing, there may be more sustainable niche funds appearing here and there, but for the everyday consumer to access those, it's a challenge. I think something that's been touched on again is the kind of technological infrastructure there to help individuals make those choices, find those products and services, understand more about them, and then select them at the click of a button. Again, lots, not all of pension providers who we engage with have quite antiquated systems. You know, you look at how the banking industry, and keen to hear from Michael about this, but how the banking industry is reframing to mobile only. You look at the kind of rise of some of the challenger banks like Monzo, the ability to access your account, see where your money's going, have more control over it, have more engagement with it, is growing in the banking sector, but it's not happening in the pension world. And so that kind of lack of tech is holding people back. And then I think just finally, I'd say the kind of ability for an individual, an everyday individual, to understand what good looks like and what bad looks like is a real challenge. Something we've tried to do lots of at Make My Money Matter is understand some basic indicators of what makes a good pension fund and what makes a bad one, what makes an environmentally conscious one and what makes a one which is less so. And the absence of the data to be able to analyze and compare is a real problem. The lack of consistent standards by which to measure that data against is a real problem. The challenge of finding, kind of ameliorating, bringing all of that stuff together and then making informed decisions is so complicated for the everyday individual who's got 15 other concerns for them to deal with, to engage in this complicated area of finance, to then engage in the even more complicated area of sustainability, just becomes a real challenge for an individual to navigate. And I think the combination of those barriers makes it a significant effort for an individual who wants to make their money matter to actually be able to do that.
With all that in mind then, David, you guys have got a really huge job on your hands, and I'm interested to know how you are taking the debate around ESG to the public and getting them interested in it, getting them engaged with it, and how you're trying to make this subject simple, interesting and accessible.
Yeah, absolutely. It's a big challenge, and a big challenge to try and do that at any time, particularly over the last year where there have been lots of other things on people's minds to be dealing with rather than pensions. But we actually feel, both from a kind of narrative perspective and tactics, we've got some interesting approaches which we think are starting to work. So from a narrative side of things, there are kind of 3 entry points that we find really effective in getting people thinking differently about their money. First is around the kind of size and scale of the UK pensions industry. People may consider their small weekly, monthly contributions and not quite realise it. But there's about 2.6 trillion in UK pensions. It's an astounding amount of money. The potential of that money is huge, and engaging people not as individual small scale savers, but as part of this collective which owns 2.6 trillion, the money is owned by and large by UK citizens, is a really powerful narrative. What could that money do? What kind of world could it build? So there's the kind of size and scale point. There's the point around the contradictions that we see as particularly powerful when you're trying to get people to engage in their money. Because right now, given how things are working, you have climate campaigners protesting against certain companies who are, through their pensions, invested in those very companies. You have vegans who are invested in factory farming. You have peace campaigners who are invested in the weapons manufacturers, kind of fueling the wars that they are campaigning against. And so highlighting this accidental dichotomy between your money and your everyday actions, again, is really powerful. So there are some of the kind of entry points we use. And then tactically, to try and get people engaged, get people excited, we try and use different spokespeople, not your everyday people who would normally typically talk about pensions, to reach people who it's not their kind of area of expertise. We try and do fun events where you can talk about this stuff in a human, engaging manner. We work on creative, so short storytelling pieces, which get these messages out there in different channels to different audiences, again, in hopefully simple, fun, accessible manners. And we try and not get bogged down in the barriers. I've just listed off a load of barriers, which there are, but what we try and do is kind of not focus so much on those, but focus on the potential and focus on the fact that things need to change and things can change, and highlighting progress. So I think there's a kind of combination of those factors.
And can you give us an indication of how much of a difference it would make if your campaign hit its targets? Can you give us an idea of what success looks like for you? You know, what would you like to achieve with Make My Money Matter? You know, in 10 years' time, what would success look like for Make My Money Matter?
Yeah, absolutely. And we're both a kind of a process and an outcome organization. And what I mean by that is, I think from an outcome perspective, as I said, there's 2.6 trillion pounds invested in UK pensions, about $50 trillion globally invested in pensions. And we think that both by moving certain amounts of that money, by getting that money invested more sustainably, and we are not a switching campaign, we're not trying to get 5% of the population to move to a nice small ethical fund. We want the defaults, the kind of overall investment strategies to be made more sustainable, to be made net zero at a minimum. We think you can move significant amounts of money away from some of the worst polluting companies, some of those companies which don't look after their workers, that don't kind of practice sustainably, into the best. And you can help drive significant change across the industry, both on climate issues, but also on the S and the G as well. So we think there's huge kind of potential there. We think that there's huge potential in kind of signaling to the wider financial market. So it's not just about pensions. We think that similar principles, although not exact the same practice, apply in the banking sector or in insurance as well. And that pensions can really be a leader in how to invest sustainably and long term. That's the very nature of pensions, are all about long-term savings, building a world for retirement. And so we think that if you can do that with pensions, you can really do that in other sectors as well. So it's about a wider financial sector shift. And then finally, the process point. We talk a lot about moving money. We talk about 2.6 trillion. We talk about net zero targets. But what we also want to do is, and stuff I know you work on, is really empowering savers across the UK to think differently about their money long term. Think of our money not as something scary, not as something static or inert, but about kind of their biggest hidden superpower in building a better world. And that means better financial security for them as individuals and a better world that they're building collectively.
Great. Well, thanks for that, David. I think this would be a good time to see if Michael has managed to get back.
Hello.
You sound, brilliant.
Hello.
Fantastic.
Hi. Yeah,
thanks,
sorry
Michael.
for that. I'm not quite sure what happened.
That's quite all right. So yeah, tell us a little bit more about what you've learned in your roles in the industry, Michael, and then how you're trying to shake things up now in your current role at Atom Bank.
Yeah, sure. Hi. Good morning, everybody. It's really nice to be here. I think that the place to start is just by kind of letting people know kind of a little bit of my history. So I've been working banking and insurance now for 25 years, 6 of them with Atom. And for the previous 20 across 2 or 3 different organizations, even though I was working in those organizations in banking and insurance, I knew that there was a better way. I just hadn't found the organization that, you know, did the simple things like really care about customers, you know, communicate in simple ways rather than overcomplicating things, be honest and straightforward. Instead, they were kind of mis-selling. And, you know, complicating things on purpose so that customers didn't really understand the money and didn't really understand the products. And then suddenly those organizations would come out the long grass and try and sell them something else that they didn't need. Until I came to Atom. And Atom's mission, its raison d'etre, is to change banking for good. And interestingly, when I joined Atom, we had a bunch of people who thought the same as I did, that the industry was ripe for disruption and that it wasn't really that difficult to do. You know, it was all about doing the right thing for customers. And then we would hope that by doing that, others would follow our lead. We knew that we couldn't do it on our own. So I guess that's the context. So how did we do it? Well, disrupting an industry or a system that has got 200 years worth of history is hard. That would be the first thing I would say. Yes, we've got a bunch of passionate, customer-focused people that wanted to change the status quo. And when we first started, we were a little bit naive. We realized very quickly that, you know, this thing wasn't going to be easy. But we've got a bunch of resilient people. that have got resilience and determination, grit, and sheer bloody mindedness. So I guess the start of the recipe needs to be in your purpose, and also in a collective group of people that believe in doing the right thing. So that was kind of the first set of ingredients, if you like. So that's all well and good, but how do you practically go about disrupting an industry or a system that's been working in the favour not of the consumer but of the organisations for 200 years? And our strategy was to change the model and turn it on its head. So banks make money very, very simply by giving interest rates to savers and getting money in, and then lending it out at an interest rate which is as high as possible. The spread, if you like, savings interest rate via the lending interest rate, and that's how they make money. And banks historically have tried to keep interest rates as low as possible, and then lend out at a rate which is as high as possible. We thought it would be pretty neat to use technology to completely change that model. So what we do is use technology to give savers the best rates we possibly can and lend out at the lowest rates we possibly can. So that was the again, very, very simple. But interestingly, if you try and do that, customers really like it. Who'd have thought? So listen, that was the start point. But where does the technology come in? Again, banks make money just as I've explained, but they've got huge costs that we don't have. So we didn't have the legacy systems. Because we have savings accounts and we lend out through mortgages, we don't have a current account. We also didn't have the costs that come with servicing current accounts. So we could use our low-cost model to completely change and transform the banking system, and give that money that we've saved because we've got lower costs to customers directly, with better interest rates for savers and lower interest rates for lending. So that, and it sounds very, very simple, but essentially that is what we've done and used technology to do so.
And it now shows a huge problem that the banking industry and the pensions industry very much share. So how did you overcome the apathy that people can feel towards their banks to get them to shift over to Atom? And do you think there's any read across there for the pensions industry?
Yeah, so if I just focus on the technology again and the customer facing technology, so that the Atom app, again, the starting point was to spend time with customers directly to understand what they wanted. So we've got a bunch of really, really intelligent, clever people, right? But it wasn't about us. It was always about the customer. So we spent time with them directly, and this, in my experience, is where a lot of organizations kind of go wrong. They miss first base. They kind of try and assume, using those clever people, what customers want. And then they build stuff and then they put it out. And they may do some testing, but they don't spend a lot of time with customers directly. And that's what we did right at the outset. So, and again, it wasn't kind of, great shakes when you spend time with customers. They want you to keep things really simple, straightforward, make things easy to use. Don't overcomplicate things. Speak plain English. Make sure your journeys are really, easy and straightforward and simple. Educate people in the app. So use things like first-time user experience and guides, so that for people that are using the app for the first time, it's not daunting. Make it secure. So Atom has its own biometric security, its own face and voice ID, for example. And we got quite a bit of stick for that, actually, when we first went live. A lot of people were like, well, why don't you just use on-device security, for example? And again, the answer is really simple, because it's on-device security. We've got people's life savings. So we didn't just want to use fingerprint. We wanted to use our own bank locks, if you like, our own face, our own voice ID, and with that, comes challenges. So we were the first people to introduce Face ID before Apple, for example. And we were pioneers, if you like, when it comes to using that technology. So you had kind of some customer apathy, like why don't you use kind of on device? But we kept with our principles, which is actually one of the main things that customer want, is they want their money to be secure. And so we kept going despite the challenges, right? And now, you know, in a COVID world, customers are saying, right, okay, we understand, we get it, right? You know, we understand that you've got bank locks and you've got device locks. The customers can't sign into the app and can't register unless they've got a security password on the device. So that's our first kind of, I guess, stage when it comes to our security proposition. Then they have to register the face, then they have to register the voice. So that you know, that would be a good example. Sometimes it might be difficult to do what really matters to customers, which is to keep their money secure. But you just got to keep going and be determined, and again, do the right thing for customers, and hope that others will follow, including customers themselves sometimes.
Mm-hmm. Well, thanks very much for that, Michael. I'd like to bring in Hannah Lewis now into our discussion. Hannah is founder of Women in Pensions. I'm a big fan of the Women in Pensions Network. I've been along to events in the past and really enjoyed them. And clearly Hannah is a very persuasive lady. Indeed, that's her job as Chief Nudger at Behave London, which creates marketing and research powered by behavioural insights. So it's worked with lots of different types of businesses, not just financial institutions, but East London restaurants as well, I believe. So Hannah is our expert this morning on how we create the right language, visuals and customer service to elicit the right responses from consumers, whether that's getting them to save more into their pension or perhaps just getting them to order more wine and dessert. Trust me, Hannah, I don't need much persuading on that front. Hannah, you've got some interesting insights around trustees in particular and what it takes to get them more involved and engaged in this whole area. Tell us a bit more.
First, I'm going to do a sound check.
Yes, sounding great.
Okay. It's one of those things. It's been a tech morning. So this is now, I'm now going to go, have I got a time delay? This is where I switch cameras. Yep, so there you go. My dad was an emergency planner, which is why I have two cameras on the go. Right, so when we're looking at, okay, so when we're looking at getting people to save, we're looking at pension communication as a whole. There's a couple of things, right? So I was involved in some of the meetings about, and you know, simplified pension statements, and I didn't get all of my own way because you know there were a lot of things that I was arguing for. So everything I do is science-based, and we do a lot of testing in pension comms. So we rewrite comms and then we test them. And what you notice is the disconnect between what people say they like and what's actually effective. So we might test 3 different letters and find that the one that the person reading it says that was the clearest. We then test their comprehension, and their comprehension is better with the letter they didn't like. So we've got to be very careful when we go for reported behaviour of what people want. We actually have to test it in the real world. So there's that kind of thing. We're very, when it comes to human weaknesses, we're very flawed. Right? We think our future self is, you know, our future self is perfect. Our future self orders salad and not cake, doesn't have dessert, obviously has all the good things on the menu. And so one of the things that you can do is kind of run with the grain of human behavior. So there's a thing called temptation bundling. And you could use this. So if you're going to the gym, you take your iPad and watch Netflix. But you can only watch Netflix at the gym, or you can only listen to that audiobook at the gym, and so that the two things are combined. And it's almost like, you know, instead of telling people not to have a coffee, just say, okay, every time you have a coffee, you're cash matching that, and that goes into your pension fund. Or we're rolling up everything, you know, to a certain pound level during the day. And some of this is, you know, tech-based. It's having the ability to do that. But a lot of what we need to do for people is to take those problems away from them. And we use things like natural resets. So your birthday is a reset point for most people, is a point of reflection. New Year's is a point of reflection, but also those kind of life events. So changing job, having a baby, whatever it is, but to catch people in those points. But also, if you think when you join a job, everything is big and confusing, right? You don't know that the push door is a pull door. You don't know where the toilets are, right? It's all very cognitively draining. So it's almost like if you want people to engage with their pension savings, you might roll them into a default. But the point where they become a permanent employee 3 months in is where you have the little meeting, or where you have a workshop where they sit down with other new starters and they then pick their choices, you know. So it's about not overwhelming people when they're already overwhelmed, picking the right points. But there's a real disconnect between, we talk about education a lot, you know, we must educate people, if only they knew. And it's like, I know that I shouldn't eat cake and I should eat more salad. That doesn't stop me being fat, you know, it makes me less fat over time if I do a little bit of that. But really, when we're talking about the education piece, we're talking about choice architecture, making it easy for people to save, making it easy for them to make good choices, such as having, you know, ESG kind of environmentally friendly options, but also thinking about the choice architecture. If you offer one climate change fund in your range of DC funds, it's an outlier. If you mirror every single fund in your fund range with, you know, an ethical fund, people are much more likely to pick it, because it stops looking like an outlier and is then a range of choices you can choose from. So we have to be very careful that we don't just make it that these options that we're giving people to do better aren't outliers. And the other thing is that we anchor high. So auto enrollment is great, but I would rather that we said to everyone it's 15%. And if you really want, you can drop it to 10, and 5 is the minimum. And that if we advertise jobs as being it's £30,000, but you get 6,000 of extra money when you do pension matching, and the salaries are advertised with, you know, we talk about, oh, it's a 15% whatever, or it's a 10% or a 5% pension fund. That doesn't mean anything to the average person. Show me in monetary terms. All of the research that we've seen, from whether it's climate change, I can tell you that, you know, the world is warming up, that's a bad thing. Or I can show you a polar bear starving to death with no ice to walk on. One of those is impactful because it makes it real. And that's our problem, is we're distanced from our future selves, and we need to make it real and visible. And with our work with trustees, we saw that educating them didn't help when it came to ESG, but being really specific about what that actually meant within their pension fund and their investments made a difference.
Right, I see. So, you know, the trustees are a really crucial part of this whole process, because unless they're on board and they've got that buy-in, then, you know, you're already stymied in your effort to get to the consumers in those really effective, powerful ways that you've just outlined there. And talking about technology, I mean, you know, we probably all accept that technology is going to have to play a much bigger role in how we communicate with members in the future. But I mean, you know, not all technology is effective, right? I mean, surely there are some ways of using technology that will be much more impactful than other ways.
Yeah, so technology is a tool, but what we always have to look for is the unintended consequences. A bit like when you say, oh, you're 55, you can have a big chunk of money out of your pension fund. Then you feel like you're missing out because you didn't go and get it, right? So the unintended consequences is, you know, you can't put the toothpaste back into the tube. So tech can make everything better, but it can make everything worse. So tech can be brilliant in that it can show you how your investments are doing. But we know that when people are panicking about falling markets, and they log in and they check when things are going badly, like they log in and check when things are going really well, and they log in and check when things are tanking. But it's almost like we want the positive reward of, oh, it's doing great. So yes, we need to look at a long time frame. So giving people visibility about their investments is really great. You know, I'm all for using tech to roll up investments and make it easy for people to save and to extra contribute, and almost like having, you know, like you have a gyro vending machine, or you have you tap contactless to get your coffee. Why can't you, what if you had one of those in reception, give yourself a fiver? And it's also framing, instead of pensions, we talk about, having a future fund, which I quite like, is just that whole idea of, gifting to your future self. But, we're estranged. So one of the ways that we've used tech to make people think about saving is we took a photo, the aging app. So that's been done in behavioural science. So you age someone's photo, stick that on their pension statement and send it to them. So it's that kind of thing of like, this is you. But also one of the things we do is roll people back and forward in time. So I say to you, it's now, do you want to save more? And they go, no, and it's okay. What if I could tell yourself 10 years ago to start saving, and you'd have X amount of money today? And they go, oh, I totally tell them. You go, imagine you're 10 years older and you come back to today. What do you say to your current self? And you can see all of a sudden, instead of it being this massive thing of 30 years, you can roll it back to 2 years or 5. It becomes like, oh, I am still that person. So it's about connecting ourselves. So that's what we can use technology for, is that idea of connecting ourselves to our future selves rather than just trying to educate.
Yeah. I love all those suggestions, Hannah, and I'm a big fan of the term future fund as well. That's what I use to describe pensions in my book, and I kind of wish we could just rebrand pensions as future funds, but maybe that's something that we can discuss in the Q&A. Before we get on to that Q&A, I'd just like to bring in Ben Pollard into our chat. He's CEO and founder of Cushon, which I'm sure he's going to tell us more about. So Ben, how does Cushon approach this whole challenge of engaging people with their pensions?
Thanks, Iona. Yeah, fantastic question. So in a way it's complicated, but in another way it's very simple. So the recipe that we use, it's got 3 ingredients. We talk about hassle, hearts, and wallet. Hassle, the simplest thing, if you can make it simpler and easier for people to do something, they're far more likely to do it. So putting something on somebody's phone in a mobile app rather than on a piece of paper through their letterbox makes an enormous difference. Just to them actually looking at it in the first place, never mind whether they actually take any action off the back of it. So it's, in a way, it's very, very simple. But in another way, it's just so important, just the kind of making it easier and simpler for people to see their pension by putting it in their phone, by putting it in their pocket, makes an enormous difference. If you can then also connect that through hearts to think to issues that they care about, then that gives them a reason to take this low effort, small step and actually look at their pension. So, for example, creating that connection between pensions and climate change. The average pension pot in the UK finances around 23 tonnes of CO2 emissions each year. That's equivalent to 5 family cars worth of emissions. Right? Imagine how good you would feel about yourself if you switched from being a 2-car family to a 1-car family. Your pension's sitting there financing 5 cars worth of emissions each year on average across the UK. So making people aware of that, combined with, well, actually, and it's dead easy, it's only 3 taps away, is a really powerful combination. If you then layer in the wallet dimension as well, by taking these small number of steps, you can actually create a really better outcome for yourself. It can put more pounds in your pocket, be that through taking advantage of the sort of free money element of it, matching contributions, tax relief that Ros Altmann was talking about earlier on, or even through making better informed investment decisions, again through some of the technology that we've got. You can make it really, really simple and easy for people to make better informed decisions, and that can create tens of thousands of pounds worth of value for people. Those 3 things in combination, making it really easy, connecting it with things that people care about, and using it to sort of put pounds in people's pockets, make a massive difference.
And are there other industries that have inspired Cushon in how it's adopted technology? And in your view, are there companies or sectors that could provide good case studies for the industry to learn from, apart from Atom, of course?
Yeah, I mean, another good question. I think, you know, without wanting to sort of sound too glib, you could almost look at pretty much any other industry for inspiration in terms of the deployment of technology. Pensions is abysmal, really, in terms of take-up for technology. The fact that we've just spent the last however many months, years debating how to create a better annual statement and stick it on one sheet of paper, it's just like, why are we even talking about that? It's just like, everyone uses mobile apps. Like, get with the real world, you know. Can you imagine whatever, the executives at Amazon sitting talking about, you know, how to put an annual statement about your Amazon Prime? It's just the wrong debate. So I look at you know, Apple, obviously massive, just completely redefined what computers are. Putting a computer in your pocket, calling it a phone. Genius. You know, Amazon, just the kind of consistency, smashing it out of the park in all these different sectors. You know, shopping, completely redefined. The way that technology infrastructure works with Amazon Web Service, completely, you know, destroyed that sort of business model. The way that media works, Amazon Prime, you know, just the consistency of completely rethinking entire sectors of industry, supremely impressive. Tesla, I think, do a very good job of that. And I think that's the sort of mindset I think we really need to kind of just like, hold on, no, we're thinking about this in the wrong way. We need to think about it differently. You know, how should it work? How should, you know, and then how can we get there? So yeah, I think there's a lot. You know, you look at China as well, Tencent and Alibaba, this sort of super app concept, where you kind of use the same app for your, you know, your WhatsApp chats as you used to pay for your coffee, all integrated in one place. Very clever, the way that sort of stuff all works. So I think there's a complete kind of rethinking, really, that you can take inspiration from.
Well, hopefully that will give us lots of inspiration now for our Q&A. But before we get on to that, I'd like to just give each of the panelists a chance to offer some closing remarks, which will last about a minute each or less. That's fine by me. But just a few thoughts really to help kick off our Q&A. So let's go in reverse order. Ben, would you like to start us off?
Just sort of closing thoughts, I guess.
Yes.
Yeah, well, I'll sort of follow up on where I was sort of going. I think, you know, when you think about sort of rethinking, what in the sort of ideal world, what would your pension look like? What would the pensions industry look like? And I sort of think about that, and I think if you asked your average person, what do you know, what comes into your head when you think about pensions? And financial services generally, it's hassle and admin and you know, and so to my mind, sort of, you know, where if we were completely rethinking this sort of this world, what would it look like? There almost wouldn't be a pensions industry as such. There'd be a kind of financial well-being super app, if you like, that just deals with stuff for you. You know what I mean? All of the hassly, boring stuff, it just deals with it. It links up with your bank account, it links up with your life insurance, links up with your mortgage. It just kind of has a kind of super knowledge of all of the different bits of your financial life and sorts it out for you sensibly. Kind of like a sort of self-driving car, but of the sort of you know, of financial services, leaving you to spend your time doing the interesting fun bit, right? So the stuff that engaging with companies on issues that matter to you, leveraging the influence of your pension to help make the world a better place, reading your sort of content feed on the positive impact that your money's having on people's lives across the world. All of the, you know, that's what tech's all about. At the end of the day, it's about saving people time in stuff that they don't really like doing, and freeing up time for people to spend more time doing things they do enjoy. And that's the sort of, for me, that's the kind of, you fast forward, you know, a couple of decades maybe, that's sort of where we should be thinking of aiming up. That's really kind of, you know, rethinking pensions through technology.
Great, thanks, Ben. Hannah, would you like to offer us some final thoughts of yours as well?
Well, along with Ben's, communist take on life, totally there. I'm all for a paternalistic attitude towards this, right, which is doing the right thing for people, or at least putting the choices in front of them that help them to save. In the same way, if you go through a canteen and there's cake first, you'll get cake, but if there's salad before there's cake, you're more likely to pick the salad. So I think it's about having a paternalistic attitude from an employer's perspective of putting good options in front of people, and then allowing them to pick from those good options, rather than just expecting people to do the right thing. And that is having high defaults, that is, in high saving rates, good matching, people rolling into good funds that are doing good in the world, and then informing them about what their funds do. Because I know when we've run workshops with members directly, they expect their employer to be doing the right thing for them, and they're shocked to find that that isn't necessarily the case. They didn't want their default fund to be invested in arms and tobacco, and when we told them it was, like, the horror, because they just assumed that that would be done for them. And so expecting members to drive that is mean. And I think we need to put good options in front of them and do as much of the work for them as we can, because humans are flawed.
Hard to disagree with that. Michael, have you got some final thoughts to share with us?
Yeah, sure. I think based upon my experience at Atom, I guess the one big thing I would say, and it is really simple, is to spend time with customers and understand the things that matter to them, and then build propositions using technology to deliver the things that matter the most. We found that by taking banking out the long grass, putting it into people's pockets, giving them an app that is really simple and straightforward, using technology to drive efficiency internally, and giving that money back to customers in terms of better rates, works. And I think, the pensions industry could do something similar. If banking was in the long grass, pensions is completely buried. It just needs to be brought out. And I think, it's great as having, and we had, similar kind of delusions of grandeur and, all these great propositions that everything would be connected. It's hard work, because even though it's new technology, sometimes things don't work as you would expect. So start small, focus on the things that really matter to customers, use the technology to drive efficiencies and give customers better rates, and then communicate to them really, really simply. And that will disrupt the industry.
Excellent, thanks, Michael. David, it would be great to get your thoughts as well on what Make My Money Matter is trying to do, and how you feel like this could change the pensions industry.
Yeah, absolutely. And I think just from a consumer perspective, I think over the last 10 years, 15 years, we've seen a fundamental shift in how individuals think about the food they eat and buy, the clothes they wear, the organizations they work for, the products and brands they associate with, making really deliberate, proactive decisions in their everyday lives about lots of the elements of their kind of consumer journey. But money has not been part of that decision-making process, and we think that's going to change. And we really feel that the next frontier for forward-thinking, progressive consumers who want to make a proactive impact on the world is thinking about where they put their money and what products and services they buy. And I think a failure of the industry to recognize that, to adapt to that and prepare to that will not only leave a huge amount of consumers unhappy, but will be a huge missed opportunity for the next generation of investors who are going to have these issues front and center. So my kind of message is be prepared, get ready, adapt, and start getting the products and services which consumers are going to be calling for increasingly over the coming years.
Fab, thank you, David. And finally, Ros, I want to ask you, what does a healthy pensions industry look like in, say, 10 years' time?
That's a great question. And I think certainly everyone has been really fantastic in all the contributions they've made. And I do believe if we want a successful, thriving pensions industry over the next 10 years, we not only have to make it easier for people to save, but we have to make them feel good about saving, proud of doing it. Whether that requires more behavioural economics and nudges, I think that makes sense. Save More Tomorrow schemes, which encourage people to put more money in, give them nudges and reminders, explaining pensions, helping people understand them so that it is just natural that everyone at work who's anyway putting money into a pension will want to see and understand what their money is doing, how it's doing it, the kind of digital approach that we've talked about and Ben described so brilliantly. You know, let's make it easy for people to see and understand how much they've got so far, what else they might want to do, how to plan for their future, which currently virtually nobody is helped to do.
Great, thanks, Ros. Well, I'm going to try to get through as many of the points and questions raised, both in the chat and the Q&A, as possible. First of all, I'm going to talk a little bit about technology, because that's an issue that's come up an awful lot, and specifically whether there's still a place for paper communications. So one of the comments here is around, you know, whether employees actually appreciate the choice. They like having paper as well as that instant online access, and whether in the future that there's a place for both approaches. I wonder what our panel thinks about that. Does anybody want to jump in and offer their view there?
Okay, first up, I just want to say that I think paper versus, you know, tech is a bit of a misnomer in some respects, which is the whole point is what is communicated and how it's communicated. The reason that tech overtakes paper quite a lot of the time is simply because it's done better, because it's been done from scratch, whereas existing paper comms are a death of 1,000 paper cuts. You know, it's like 20 people have been involved and rewritten tiny bits of it over time, and it's never had that proper overview, which is something that we do when we restructure stuff. But it's that feeling of, you know, we do pay attention to what comes through the door, and we find that actually for the under 35, they don't get a lot of post, but they are bombarded with stuff on a tech basis. So sometimes the best way to reach people is a piece of paper. You know, but, you know, absolutely, I think having instant access to your information, but then that's ease of access, right? That's a single sign-on from an employer standpoint, or an app. It's not find your log on, you know, say your distance, so you have to do something to get the information, because it's all about the lack of friction.
Given where we're starting from, I think it's going to be essential to have both paper and digital as options. We have, unfortunately, as an industry, seemingly spent 5 or 10 years just trying to come up with a simple paper statement, as Ben was saying, and we haven't even got that introduced yet. It's coming. Quite honestly, I suspect that there are a number of legacy pensions for older people. Don't forget, there's a lot of older people with lots of money in pensions who need serving as well as the younger ones. They won't necessarily engage in the same way with digital, and they will be in legacy pensions, which will probably never get online, or will struggle with any reasonable time frame to get online or on the dashboard. But if we have a simple paper statement, which can be mirrored by the digital statements, then you've got a chance of helping people have a dashboard that shows all their pensions in one place, as well as having the option for those people who aren't digitally enabled, and even those who may still live in areas which don't have good connectivity, to know what their pensions are and engage in the same way as everybody else. I think the idea that you know, banking should move all online straight away, it just isn't going to work, much as we might like it to, because a lot of the population hasn't grown up with tech and isn't comfortable with tech. And given that we've got people of all ages here, we need to cater for everyone, I think.
I'll just put the case for tech, just to sort of balance out the conversation. I think for me, there's two sort of killer advantages that something on your phone, and importantly, it's on your phone, not necessarily just tech, sort of web or whatever, has over a bit of paper, and that is one, it's always with you. It's just sitting there in your pocket, it's always up to date, it's live, it's real. It just makes it more convenient, which means people are more likely to use it. Why is it that, you know, I read all my news on the app rather than going to the newsagent to buy the paper? It's just easier. And two, you get so much more scope to do stuff interactively. You can do animations, you can respond to user input, you can chop information up in small bite-sized chunks and serve it up one piece at a time. The whole kind of experience is a lot more tailorable through technology. So I'd completely agree. I think, you know, I was tempted to just to sort of get some debate going, just say paper's dead, but it's clearly not. It has a role. It's useful. It reaches parts that other things can't reach, or, you know, totally get all that. But I do think, you know, that the opportunity that is created through what you can do with mobile apps these days is phenomenal, and we need to sort of focus on capturing that opportunity as much as sort of improving our paper-based stuff as well.
Yeah, just building on that, Ben. So from an Atom perspective, we don't send out any paper. But again, back to my point around proposition design, if people are going to kind of subscribe to organizations that don't send out paper, then you've got to make it really easy and simple and straightforward for them to access the document. So we've got a vault, which is behind our security gateway, which stores all of the information that you need in terms of your statements and any communications that you may have had. But back to your point around it being really easy to kind of access those documents and then print them out if you so wish at home. You know, we've got an experience that makes it easy for people to do that. And again, you know, Ros is talking about, I guess, everybody. We are not for everybody. We are just for kind of people who are kind of not even tech savvy, because we've got a lot of savers that came to Atom who had never saved digitally before. But the reason that they came to us in the first place, and the reason that they're still with us, is because we made that bridge, if you like, from the analog world to the digital world really easy to cross. And then once they got across there, you know, they really, really liked it because it wasn't as scary as they thought. So they would be my thoughts.
And another big issue that's come up in the discussion has been around whether or not we need to be talking so much about education and engagement. And indeed, there's been a debate as to what those terms actually mean, whether there's a lot of confusion about those terms, or whether we need to trust in the magic of nudge, auto-enrollment, and perhaps have a system of auto-escalation to get people saving automatically more for their future. That's been a big debate in the discussion, and I wonder what the panel thinks about that. Does anyone want to jump in there?
To be brutal, you absolutely have to make it a structural change to help people. What we've done in the UK is we've diluted Save More Tomorrow. The whole principle of Save More Tomorrow, when they ran the test, was every time you got a pay rise, you automatically paid more into your pension, and they got people up to nearly a 15% savings rate, and these are manual workers, within 3 to 4 years. Because it always comes out of a pay rise, it's extra money, and therefore it's not painful, it's never a detractor. And what we've done in the UK is we've just gone, okay, we'll just put it up every year by a minuscule amount. But the whole point of Save More Tomorrow was that it came out of extra money. And the younger someone is, the more effective that tactic is. And the employers should be doing that. You know, none of this salary sacrifice stuff. It should be automatically showing you what you get, but also the matching aspect. So don't show me I'm putting £300 into my pension. Show me what the matching is, but also show me what the long-term effect of that is on my income as well. So show me the win. Connect me to my future self by making it really easy to see that that £3 becomes however much over time. And it's much easier for people to kind of gamify themselves to go, oh, if I put this little bit in, I can see how much more I get.
Anybody else have any thoughts on that issue?
As I said, I think that has to be one of the potential policy tools that will help people understand and recognize why they would need and how they could build better pensions. quite frankly, I'm not quite sure why it hasn't been done already. What is stopping anyone, either as an employer or as a pension provider, just suggesting or asking any worker that gets a pay rise, would you like to put, say, half of it into extra pension and we'll add more money to that? You don't get those messages. You know, I don't understand why the industry seems to keep waiting for someone else to make it happen. And meanwhile, it's not happening.
I agree, absolutely. And I've had these conversations and it appears to be purely just like an HR thing. It's really simple. It's almost like the default, like, we thought that you would want to put half into your pension and spend half. Is that right? Or do you want to make it less? And it's just that kind of anchoring that you just make the assumption, in the same way, I assume you're not going to smoke in my house. You know, it's that, make it the default that someone does that and make it known, and then let them kind of dwindle it down to no input whatsoever.
It's also the sort of thing that technology can make a big difference to, right? Because if you've got it in the app, someone gets you push notification, we see you've just had a pay rise, we assume you want to put half of that in, yep, confirm, done. And the next payroll cycle, we'll surface that to the HR people and they'll process it. So it's again, the technology enables a lot of these things to be done more easily than you know, has traditionally been the case.
And the other thing that I just want to chip in, which is, it's about committing your future self. So it's about, I don't care about my future self. That's the problem with pensions. But equally, we don't care about our future self. So getting someone to commit when they join, to say, when they join, every time I get a pay rise, I will do this, means that it's happening without them having to make the choice each time, which increases the friction. And then it's painful because they're giving up money, as opposed to they pre-committed themselves to do it and therefore they're going to do it. A bit like paying for a gym membership. Gotta go.
Yeah. We didn't touch on inertia, but it appears to me that an organisation that kind of hasn't engaged with its customers for the reason that if it does, it might be scared about losing money, is a difficult cycle to break. But somebody's got to break it, and if somebody does, the whole industry, hopefully, just as we've done with Atom, might start to follow. But it's going to be a tough cycle to make, because there's a lot of people out there, a lot of companies out there making a lot of money from the way it is now in pensions.
I do think that we have to be careful of putting too many burdens on employers, and this is really some pension provider themselves probably should be taking responsibility, because with very big companies, yes, the HR department may be keen to show that everybody's taking the extra matching above whatever auto enrollment is doing, but there are many employers who might offer it, but perhaps not so keen to promote it heavily, yet the pension provider can be aware of when people's salaries tend to increase, or look out for it from the increase in pension contributions that might come through. You can see someone's had a pay rise, and that could technologically trigger a friendly message to the person: congratulations, you've had a pay rise, and if you want to, we're happy for you to put some extra money, and you get the free money from the government, even if you can't get an employer match.
I'd just like to pose a question for David specifically. This is from one of the attendees asking: is it better not to fund oil companies, or should you be investing so you can use the voting rights to change company behaviour? I mean, this is a really fundamental question. Where's where does Make My Money Matter stand on that issue? Great
question to end on. Just go straight to the heart of it. There are different approaches, and we are not a kind of pure play divestment campaign. We're not telling everyone to get out of all oil and gas right now. And I think for many reasons, people understand about the people who work at those companies, the reliance we still have as a world on fossil fuels. So, we're not trying to get everyone out of all fossil fuels right now. And so we think that there is a role for active stakeholder engagement for pension funds to play in driving the transition amongst those companies, because as much as we think there is a role for them, we think they need to transition, we think they need to change, and we think they need to put kind of the environment at the heart of their business right now. And so how we approach things, and this isn't for everyone, is that engage, push, challenge, fight for change within those companies where you are a stakeholder of, use your power, use your pension power, use that leverage to drive transition amongst those companies. But if that isn't working, if those companies aren't willing to transition, if they aren't engaging, if they aren't moving fast enough, that divestment has to be a tool and an end in that kind of suite of assets you have to drive that change. Engaging without the threat of divestment, we feel is pointless, because there's no incentive or no risk for those organizations to change. So we think there's real value in engaging, push hard, use that power. And if it's not working, if they're not changing quick enough, we think there's a role for divestment. Just to say though, our campaign is about empowering individual consumers to make the choices for themselves as well. So organizationally, we may feel a certain way. However, we want individuals to be empowered to make that decision for themselves as well. So if you don't feel comfortable investing in tobacco, if you don't feel comfortable investing in fossil fuels, if you don't feel comfortable investing in arms, it's not for us to tell you that is right or wrong, but it is for us to help you kind of understand that, empower you to make more proactive decisions around that, and find solutions which make you feel more comfortable as a kind of owner of that money.
Great, thanks, David. We're rapidly approaching the end of the session. We've only got a couple of minutes left, so I think I might end with a question from Michael about, first of all, the average age of an Atom customer, and also you've got a rather high-profile investor in the form of will.i.am. I wonder, will you ever get him interested in talking about pensions in public? Because I reckon that could probably do the cause of pensions quite a lot of good.
Yeah, sure. So on the average age of our customers, I can't divulge the actual kind of average, but what I can say is that, like I mentioned earlier, we've got kind of savings coming in, and then we'll lend it out through mortgages. And the vast majority of younger people don't have savings, right? So you can kind of put two and two together and work out that it's probably older than you would think. But back to digital adoption as well, because our model, as I've described, is all about using the technology we've got to drive efficiency so we can give customers better rates. We found that even older customers, the oldest customer we've got is 101, right? And she found the app so simple to use that she could set up, transfer her money, and away she goes and doesn't have to think about it. And she's getting the best rate, right? So we found that if you make things really simple, super easy to use, give customers the best rates, it doesn't matter how old you are, you will move over that bridge from analog to digital. And once you get over, as I've mentioned, you will stay there. In terms of will.i.am, so the reason, many reasons that will.i.am joined the board as an advisor, but the first was he talked about being unbanked. So he came from a very, very poor background in the States and started to get traction in his career. And he came over, because we were like, why will.i.am? He came over to Durham and talked about this. And he said, as he started to get paid, he was paid in checks, and he just put them in his battered old car's glove compartment because he didn't know what to do with them. So back to our vision around changing banking for good. That's the reason that he came on board. He knew there was a better way, and it was like, how can we use digital to help people have a better relationship with money, and to take control back from the big organizations and give it to customers. So that's the reason that Will got involved in the first place. In terms of the pension industry, I'm sure he would have a view on that, but I would imagine, given his mindset, it probably wouldn't be that much different to what we've been talking about today, right? Simplify things, take out the complexity, give control back to customers, and use technology to make it easy. And we will move the industry forward.
Well, I think that's a fantastic note to end on. Thanks so much to our brilliant panelists this morning, Ros Altmann, Michael Sherwood, David Hayman, Hannah Lewis, and Ben Pollard. I'm Iona Bain. I've been your chair this morning. It's been a pleasure. I've learned so much, and I hope that you all have too. Thank you all so much for coming along. Have a fantastic day. Bye-bye.